What does APR actually mean? What is APR? APR stands for annual percentage rate. It shows how much borrowing money really costs you in 1 year. If you borrow money, APR helps you understand the true price, not just the headline number. Why APR exists? Lenders don't just charge interest. They may also add fees, charges, extra costs. APR combines everything into one number, so you can compare deals easily. Interest rate versus APR. Interest rate equals the basic cost of borrowing. APR equals interest plus most fees. Example, loan A, 5% interest plus fees. Loan B, 6% interest, no fees. APR helps you see which one is actually cheaper overall. How APR works in real life. A low APR is cheaper over time. A high APR is more expensive. APR is especially useful when comparing credit cards, personal loans, car finance, mortgages. APR on credit cards. Credit cards often have high APRs. This only matters if you don't pay the full balance each month. If you pay in full every month, APR doesn't cost you anything. APR on loans. With loans, APR shows the total yearly cost. It helps you compare offers from different lenders. Lower APR usually means lower monthly payments, less paid overall. One important thing to remember, APR assumes you keep the loan for the full time. You make payments as planned. If you repay early, the real cost may change. APR tells you the true yearly cost of borrowing. It includes interest most fees. Use APR to compare deals. Avoid expensive borrowing. Make smarter money decisions. Lower APR equals cheaper borrowing. Thanks for watching. If you found this interesting or helpful, please tap the thumbs up. It really helps. And if you'd like more simple, easy to understand videos like this, subscribe for more.